In this video, I'm going to show you how you too, on just a few minutes a day, can pocket nice, consistent weekly and monthly cash flow by trading in options. I'm going to do that by sharing the trades I've done this week. By the end of this video, you'll see how I've been able to pocket some nice, easy cash in between hikes in the mountains, filming a bunch of videos for you, and even cooking my own dinner at night. But it'll help you see just how easy it can be once you learn this option trading strategy. I'm going to go in order here so I don't miss any trades so far this week. So first, we have a few buy to close put orders. The first one here, we bought to close some Google options for a nice 90% profit. The same thing with MET, closed some put options early for a nice profit. And also QCOM, closed options early for a nice profit. But that's probably not why you're here. But I did want to share those with you because I wanted to show you how you can close these option positions early and achieve really nice returns and profit. Now let's get on to some new trades we've done this week. Here you see a risk reversal we did in SMCI. Now I have a whole video dedicated to risk reversals, but let me briefly show you the trade we did so you can see how simple and logical and really easy it is to do these option trades. All right, now I'm on Patreon. This is the platform I use to let my Patreons know whenever I buy or sell stock and options. We're going to scroll down here to the SMCI trade I was just sharing with you. Let's focus here on this SMCI risk reversal I did. Now, SMCI is a very volatile stock, and it's one that we have done trades on multiple times over the past year. We've done really well with it. So when I saw SMCI come down in stock price several weeks ago, I began to watch it to see when it was going to level off and give me an opportunity to enter a new risk reversal in it. And what that risk reversal looked like? Well, it looked like selling some put options at a strike price I'd feel very comfortable owning SMCI at. And that meant selling the December 17th options that expire over 2 years into the future at the $23 strike price. And SMCI is trading a lot higher than that right now. But in order to give myself an opportunity to win extra, I also bought a call option. So you see I bought the SMCI December 17th, option expires 2 years into the future, and I bought the $75 strike price. But in spite of buying that option, I still walked with a nice credit of $327 for this trade. Now, I don't plan to be in this exact position throughout this whole time. That's a possibility if SMCI goes against us, but historically it hasn't. We've done really well with these trades. We've done this, I think, 4 times already. But you see with SMCI trading right now at $44.39 per share, that put option we sold around $23 is very far out of the money, and it's at a valuation I feel comfortable owning SMCI at if it came to that. The goal is not to own SMCI, it's to use options to generate nice cash flow and return. So we're in this position, now what? Well, now if SMCI were to go up in price, I want to get rid of my risk as soon as possible. So I would buy these $23 put options back, and I'd pay for that by selling a call option at a strike price above this $75 strike price that I own with the same expiration date. Last time we did this, I think we pocketed $5 or $10 per share. So we got paid $327 up front, and we'll see what happens. All right, the next trade we did, you see on this next line here, 4,340. We sold to open some put options at EPD. That's an MLP that I really like. It's a high dividend paying company, very consistent, very profitable. I like EPD. So I sold some put options against it. And what exactly did I do? Right now it's the middle of September, and I sold the December 19th $30 put options in EPD and got 52 cents per share. Now, as you see here, EPD is a very consistent stock. And right now, with the market being open, and the Fed actually just are making their announcement now, so I don't know what's going on in the market. I'll find out after I finish recording this video. But right now, it's trading for around $32.14 per share. It's have to come way down here to around $30 per share before these put options are challenged. But if they are challenged, I'd actually be okay owning EPD at $30 per share. Again, that's not the goal. The goal is to close these out early, but I'm selling it at a strike price I feel comfortable owning this stock at. All right, now on to my next cash secure put option I sold. I sold to open some put options in MDT and got almost $94 for that position. Here you see the alert I sent to my patrons about this trade. I sold to open the October 17th 90 put options for 95 cents per share. That's almost a $100 bill in my pocket for just a few minutes worth of time. And where is MDT at? Well, it's currently trading for $94.80 per share. So my put option is right down here below all this previous support over the past several weeks. So I won't be challenged until it drops about almost $5 per share. So I got some cushion there. And again, my goal will be to close that out early like I did the first positions I was sharing with you in this video. Right now, here's a little bit bigger money position. And this one almost paid for my cabin rental for the whole week. But I rolled some cash secure put options I sold in PSA. So I bought to close the September 270 put options, and I sold to open the December same strike price 270 options and got $5.65 per share, or $565. Here you see the daily chart of PSA. Notice it's currently trading for just under $295 per share. And if I zoom out here, you see that its low is right around 268 or 270. And I was back here in August. So So I'm selling it right at an area where it previously found support. The other thing about PSA or public storage though, is that it is a very consistently profitable, growing company. It's grown its earnings consistently over the past decades. It pays a really nice dividend. So overall, if I had to deal with PSA at $2.70 per share, I'd be very happy with that. And for that, as you see here, I got paid nice premium, $565. And then I'll share one more with you. It's Netflix. Now I was in a Netflix position that got closed out early, so I was waiting for it to come back down so I could do a new Netflix position, and that happened over the past week. So here's the trade we did in Netflix. I sold the October 17th, or the option that expires in about a month from now, the $1,000 strike price. And I bought that same expiration day, $900 put option for protection. We got $1.50 per share, or $150 for this trade. Here's what the daily chart looks like of Netflix. So I was waiting for it to come back down, which it did several days ago. Now on this day here, this green candle here, that's the day I entered this new bullish put credit spread in Netflix. And again, I'll look to close it out early if given the opportunity for a nice win. Here's another trade I did this week. Now this is actually closing an order out. So a while back, I sold a put option in ELV, and like a lot of healthcare stocks, it's gotten hammered lately. So what I did with that deep in the money cash care put option, I sold a call option against it, and it kind of acts like a cover call. Now it is a naked cover call, but with that cash care put option I sold being so deep in the money, it acts kind of like a cover call up to a certain price. So I collected a nice premium for selling that call option back when I sold it, and I closed it out for a 90% win, so I bought it back for 37 cents per share. And then finally, one more of what I call my old reliable ticker symbols, Verizon. I sold some of the October 17th 42 put options and got 42 cents per share for that. And again, these options expire in about a month, a little less than a month from today. And here's the daily chart of Verizon. So I sold this $42 put option, which is about right in here. So that $42 put option is right below all this previous support. It's also below the red 200 moving average. And it appears that Verizon has made a nice new higher high here. Now it appears to be trying to bounce off this support and head back up. So we'll have to see how it turns out. I'm still mid-trade on this. In fact, I just entered this trade 2 days ago and it's already up for me. But we'll see how it turns out. The point I'm trying to make with you in this video isn't the $1,500. This is definitely not my best week by a long shot. Those $1,500 I made in between doing a lot of other stuff. It only took a few minutes of my time. My main focus this week is on filming as many videos for you as possible. And yet, with just a few minutes a day, I was able to pocket $1,500, and we're only halfway through Wednesday. And I've also done some fun stuff. I cooked some food that I really like, including a couple of really good steaks, drank some good wine that I brought with me, was even able to do some hiking, which I got some nice pictures of. But overall, having a solid option trading strategy creates a really easy and simple way to generate consistent cash flow and returns. And what's nice about it, you don't have to be chained to some cubicle, chained to your house, even chained to some state or country. You can be anywhere in the world and do this on just a few minutes a day. If you found this helpful, please hit the thumbs up like button and consider subscribing. If you'd like to get an alert whenever I buy a stock or sell options, check out the benefits of becoming a patron down the link in the description below. One of my favorite trades to do is a covered call. In fact, that was a trade that I did yesterday. It's a trade that I not only have already seen nice stock price appreciation on this position that I traded in, I've also got monthly dividends as well as some nice cover call premium. If you'd like to see my full cover call strategy, check out the video at the link above and the description below entitled Covered Calls, My Full Strategy. Until next time, happy investing, and we'll see you again soon.